Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to do a short video on process. We're going to talk about the opening range from the playbook, hopefully to reinforce some simple concepts that come back to developing consistency. Consistency day in and day out that will help us maintain our composure, our understanding, and our ability to hunt out the best trade setups, regardless of the session that you're trading. Now, this is my approach. I trade 99% of my trades are going to be in the U.S. session, but as I mentioned, I look for moves front side or back side that could potentially be on a day 2 or a day 3 in the Asian session. And those are going to be ideally a parabolic setup. But just in terms of simplicity today, we're talking about the process Monday to Friday. That's what will allow us to develop a thesis. And that all starts out with the opening range, which is our Monday. And we have had this discussion. Traders have had confusion, some frustration about the day counts and everything else. And as I mentioned, whenever in the whole importance of understanding the Monday to Friday template, day 1, day 2, day 3, day 1, day 2, day 3, is because regardless of the other 3-day setups, day 3 breakouts, this always is simple. Monday's day 1. And that's because you could come into a new week and have, I know that traders like to ask all the time, where do I think oil's going? Or where do you think the indexes are going to go? The commitments that traders report is this, and retail sentiment is this, and what about gold? And that's completely foreign to me. That none of that is of any relevance. All I'm looking for is when I come to the screen, is there news in the session that I'm trading, major red news? And is there an opportunity? What day is it? And is there an opportunity? Is this going to be a session scalp, 25, 50 pips? Or does this have the potential for a parabolic explosive move, maybe 75, maybe 100, or maybe just 50, but it's going to be an explosive move that's over fairly quickly? Looking for parabolic opportunities, if you understand the opening range, that allows us, or me, to have a template thesis. And sometimes that may take 2 or 3 days. It may be a thesis that doesn't really complete for an instrument until Friday. We could see a Friday reversal, a Friday parabolic trend continuation, free cash Friday. We could see a free cash Wednesday opportunity, but only if I understand the template in the instrument that I'm trading and have a thesis. Now, sometimes we have major red news that can completely distort what we think we see. And again, until maybe the week evolves, we don't see the template clearly, which comes back to sticking with the simplest setup in the session that I'm trading. And if I can't tell what something is, I'll look at gold, maybe if there's major red news for a first bounce, because gold moves. On other days, it may just be something where we're on the backside. There might be an opportunity for a move in London or in Asia or in the U.S. session on a currency for traders, and it's just a 3-session setup for that day. Maybe it's a day 2, and then maybe we're still not really setting up for a larger 3-day parabolic. But again, the opening range is what will allow us to form that thesis. Just coming back to the playbook, opening range, initial balance, we talk about that, and that starts the week, and that's what allows us to form an opinion on a Monday maybe for a 3-day setup, or over the week for 3-session setups. But the opening range is what allows us to step back and have a larger picture understanding as the week evolves for larger parabolic opportunities. Now, I talk about Peter Brandt. Peter has had a huge impact on me. He puts out a list every year, best dressed list, and he puts his criteria of what he looks for or what he considers to be his best dressed trade list. A clearly defined, no doubt about it, classical chart pattern of at least 12 weeks in duration. Now, Peter trades longer time frames, daily, weekly charts in a tradable market. A decisive breakout that does not put a reasonable breakout entry into serious harm. An intermediate trend to be the implied target, typically representing a price move of at least 10 to 20% of the underlying value. Now, this is classical charting. And as I mentioned, I'm looking for opportunities. Everything's fractal, and we can see the same type of opportunities set up over the course of 3 sessions, 3 days. And my approach to the market is I'm not looking to be, buying and holding something for extended periods of time. I'm just trading in the session that I'm trading. But the same principles apply when you understand range expansions, when you understand the opportunities of asymmetrical risk reward, rectangles, ascending triangles, descending triangles, head and shoulder patterns, but compressed coiled markets that explode. Now, these are monthly charts, but you understand when you get a large monthly move, for larger funds, for traders who are positioning themselves and holding, this is the same type of criteria that can be applied on a smaller time frame for positioning ourselves and extracting profits out of the market in the session that I'm trading and being flat at the end of the day. Now, for simplicity, we're going to go and walk through some examples and just talk about opening range, and the importance of understanding what that means to the rest of the week and whether or not there's even a best trade setup. So many traders focus on one instrument. My approach is to try and find the best trade setup on any instrument, not trying to trade the movement on just one instrument. Now, when you understand the 3-day cycles, one instrument can offer potentially maybe 2 or 3 very high quality, high probability moves in 1 week, and they may occur in the same session for that trader. But we can get you, and as I've said this before as well, you only need 1 or 2 really good high quality trades to significantly grow a small account if you have the patience and the understanding of when that parabolic opportunity sets up. We'll just walk through some examples from this week. You can walk back and go through your charts on any week, any example that you would like. But we'll just talk about the opening range, Monday's high, low. We're on the Japanese yen. This is a 1-hour chart. I'll just use 1-hour charts for these examples. And again, you can walk through your own charts and understand the type of template that you're potentially trading in. Day 1 is our opening range. Now, we talk about day 2. Tuesday is our initial balance. We have a market that breaks out on Tuesday, and we know that now we have day 1 longs in the market. Day 2 longs on Wednesday. Day 1, day 2, day 3 goes parabolic. Day 2 longs in the market. Day 3 longs in the market on Thursday. So we have an opening range breakout. We have our Friday high of the week, day 3 breakouts, day 3 longs in the market. We're above major round numbers in the 3rd level of a 100 pip box. We have the Fed on the schedule. If we're up high and we're looking for a thesis of a reversal opportunity, potentially a retest of the breakout traders on day 3, we now would go to first bounce after the Fed. We have a first bounce entry after the Fed and day 3 longs in the market after major red news for a reversal trade on Friday. So coming back to whether or not traders traded any of the other moves, if they were trading the other days and not understanding the type of template, day 3 longs, day 1, day 2, day 3 were in an opening range breakout, Friday offered them an easy, low stress 50 to 75 pip move that could have been sized into after major red news, aligning with our larger time frame. So one comment I received from a trader was, I don't gamble on 1-minute charts. Either do we. We like to look at the larger time frame. This market's being driven by other time frame traders, and at the end of the week, they might be locking in profits. This is a chart that has built up over 5 days. Day 1, opening range. Day 2, initial balance. Day 1, longs in the market. Day 3 goes parabolic. Day 2, longs in the market. Thursday, day 3, longs in the market. We had major red news on Friday, and the reversal, parabolic reversal trade after major red news, first bounce at the high of the week. And also, if we just back up and take a larger look at the dump and pump, we took out the high of the month on Thursday, and the reversal comes back to that breakout from the high of the month. We can go back and look at any week, but I'll let you do this on your own instruments. The opening range. Monday sets the initial high-low for the week. Day 1, day 2, day 3, parabolic. Day 3 becomes our new day 1. Day 1, day 2, day 3, parabolic. Free cash Friday, free cash Wednesday. We can look at the euro. Same process applies. Day 1 is our opening range. You can project those levels across. We talk about opening range breakouts, whether or not you're already in an existing potential setup on Monday is a different scenario, because you could be part of a 3-day cycle that's set a 3-day setup for a trade on Monday, or we could already be in a broken down market. So we see where traders get trapped in it's a day 3 breakout already, but we have a new week, and Monday sets the initial high low for the new week in a new template. Day 1. Day 2 trades up to the high of the week before reversing and giving us first red day. We'll just stick with the opening range. We won't get into inside days or anything else. First red day. Day 1, day 2. Day 3 goes parabolic in the Europe Open. We have an opening range breakout. An opening range breakout that pulls back and continues to drop. Now, again, we can talk about range expansions. We have a geometrical range expansion of a rectangle. Coming back to Peter Brandt, the understanding of classical charting principles. The whole understanding of opening range, initial balance, gives us that potential understanding of if there's a breakout and the potential for a range expansion and projected profit target areas. Day 1, day 2, day 3 goes parabolic. We start our count again coming back into Friday. Wednesday, Thursday, Friday, day 1, day 2, day 3. The market pulls back, reverses off the bottom of that expansion. On a Friday, we'll zoom in on this. Free cash Friday reversal. Opportunity in Europe London window, again coming off of quarter levels. We get a rectangle, as Peter Brandt would say, a pattern within a pattern, a smaller rectangle as part of our larger geometrical structure that begins the reversal back. And then reversal trade after the news, possible first bounce, after the Fed for a vertical parabolic explosive move in line with our thesis of being in a reversal market. Again, the dump and pump setup heading into the news. We could look at West Texas. Now understand again, it's not about curve fitting a thesis into an instrument that you're infatuated with. It's about understanding where the best trade opportunity may lie in the session that you're trading. So coming back to whether or not traders want to trade oil, or they want to just trade the Aussie dollar, or they want to trade gold, entirely fine. It does not matter. But it may be important to understand stepping back and knowing when there is a parabolic opportunity, day 1, day 2, day 3, in the session that you're trading, rather than trying to just scalp or get in and get out of moves because you like trading that one instrument. Entirely your choice, no judgment. I'm just giving you the insight of how I think. I'm looking for where is there a parabolic opportunity. Now, obviously, I like to trade gold. I like to trade oil if there's an opportunity there and I see it. But I will trade anything if I am able to pick up and recognize a parabolic setup. Our opening range on Monday, Monday high low. And you'll notice we had a false break of Friday's low of day. We have trap volume below Friday's low, and that begins our day count, possibly in a 3-day cycle. Trap volume below the low of the week on a Monday. Day 1 sets our opening range high low. Day 2, back inside. Day 3 goes parabolic with some volatility. We had a 3-session setup right at the open of the U.S. session, and then that gave 75 pips for traders, pulling back and continuing at the end of, or towards the end of the 3-hour window. Again, now we have an opening range breakout. Day 1, day 2, day 3. Again, the Monday pink line separates our Friday, Monday for traders who maybe can't see that. We now have a new high of the week. Thursday gave traders a first red day again. First red day, sell high of day, high of session, if that opportunity presents. We had a chart that went 3 levels of rise. We talked about this yesterday, a very well-engineered chart, clean. 3 levels, Asia, London, New York, heading into the 9 a.m. crude market open for a parabolic collapse back into our opening range breakout. So again, traders, these levels, the opening range establishes our initial high-low for the week. We had a failed breakout. Day 1, day 2, day 3 goes parabolic, starting at the London session, continues in the U.S. You'll also notice, we won't get into it, but we had a false break at the low of Tuesday, which by all essential counts is an inside day. We're inside, slightly tapped the high of Monday, but you'll recognize that we are still underneath of Friday's high. Trap volume, explosive parabolic move on day 3, Wednesday, Thursday, Friday, day 3 again, a parabolic reversal at the high of the week. You can look at the indexes, Dow Jones, you can look at your S&P and NASDAQ, again, go and do your homework, it doesn't matter. Same process applies. That's what's great. We can argue till the cows come home about theories and theses and commitments to traders and everything else. But if we have a high-low on a Monday and we project those levels across, the next step for a trader is to develop a thesis for the session that they're trading and find the best instrument. We could find 10 different opportunities, and we may all trade them differently. It doesn't matter. It's irrelevant. But the thesis, the process is the same. Monday's high-low sets the initial opening range for the week. Obviously, it's an inside day on the DJ30, inside of Friday's low, heading into the week, but we have Monday's opening range. An opening range breakout on day 2, a reversal in the London session that takes out our high of the Asian session, and we have our pattern within a pattern again, as Peter calls it. And lo and behold, also an ascending triangle. So coming back to classical charting geometric patterns, we get a day 1, day 2, day 3 potential reversal. This trade gave traders a fantastic short trade heading into the session. Again, just at the New York Open for an easy 50 pip reversal. This was the move into the low of the day from London. So breakout traders on Tuesday. This was the pullback in a short trade, but then the market on all indexes gave a vertical short squeeze reversal after the stop hunt down at the low of the week, coming out of an ascending triangle on an opening range breakout that now has potentially failed and offers traders an explosive move back to the high of the week. Day 1, day 2, day 3. Day 3 now, our Wednesday, becomes our day 1 heading into Friday. Day 1, day 2, day 3. Day 1, day 2 extends the range and continues higher later in the session. So again, a new high of the week, continues to move higher right at the beginning of the day. And again, having a little glance to our left, we can see high of day taken out. We have major red news on day 3 at the high of the week, fed at 11 a.m. After major red news, we have first bounce for the collapse back down into traders who are long. And to me, this was a very obvious opportunity because we talk about recognizing when there is space. Death line, trap volume, high of the week, first bounce trade that offered traders significant asymmetrical risk reward, trading when the setup was there after major red news for the reversal back into the high of Monday's opening range. You'll also recognize the breakout longs from late in the session, taking out Thursday's high of day, a gap underneath, So a fantastic opportunity. Now this is just one template. You can go and study again on any charts that you want. Process, process, process. That's my mantra. So regardless of what I think I see or anything else, I can always come back to where am I in the week? Is there an opportunity? What day is it? We can look at gold. We have our opening range, project those levels across. For me, coming to the screen in the US session, all I'm ever looking for is, do I have a best trade candidate? Session peak formations, US session, peak formation high, peak formation low, inside day on Monday. We had an opening range breakout in the London session. Some traders still messaging, asking about first green day. Yes, first green day, but remember, it's Monday. We have no trap volume. We had our day one. We started our day one count, but we had a breakout of our opening range inside without taking out the low of the week. We have a breakout of our Asian range. That's a rectangle, a smaller pattern within a pattern on day 3. 3-day setup. It's our Tuesday, but this is a day 1, day 2, day 3. Low of the week, trap volume. And we've talked about this in previous videos when they split it. So day 0 setup, we had a split peak formation low, peak formation high on Friday. And when we see that, there's a possible parabolic opportunity, except it did not eventuate. It did not consolidate and go vertical on day 2, or Tuesday. We have a market, though, that broke down and went sideways inside of that peak formation. And so now the same thesis applies. The day 0 setup. A 3-day day 0 setup. It can be 3 sessions, but when we get a 3-day day 0 setup, that can offer us significant opportunity for a measured move range expansion. Stepping back and visually identifying that you are in a box. And that box, body to body, can offer us the potential for a range expansion as a projected profit target if indeed this market is moving and breaks out. We have our opening range, Monday's high low. The market breaks out on Tuesday and continues. It breaks out of our geometrical structure, Friday's high low. We have a potential measured move for the session if you're trading in that breakout, Asia, London, New York. The underlying thesis is that obviously now we're in a market that could be in a range expansion. So again, this is an example where traders are focused on day 1 breakouts, day 2 breakouts from the previous week. I don't understand. Day 1, day 2, day 3. Come back to simplicity. Ground yourself in the process. Day 1, day 2, day 3. We break down again on Wednesday. And as I mentioned, a day 3 trade, we go parabolic on Tuesday, a market that continues to break down. Wednesday is the beginning of our day count again. And coming to the screen in the session that I'm trading, unless there's been a reversal, I'm not looking to counter trend a market in a breakout. Remember, we are in breakout now. This market has the potential to continue to move. And then understanding the importance of the calendar, major red news, Fed Chairman Powell speaking on Friday. We will see this sometimes on a payrolls week where the market may evolve over 4 days because they're going to use the news to trap traders up high or down low for an explosive reversal trade. Now, I showed traders that on the 15-minute chart, the ascending triangle that's set up heading into the news, but also same thing that we saw on the other charts. Pattern within a pattern, a rectangle that starts at the end of the US window and the beginning of Asia. We have a pattern within a pattern, the beginning of an ascending triangle. As the day expands, that range becomes larger. And again, body to body, this is an hourly chart, body to body, we have a possible range expansion as a target back on the short squeeze setup. This setup gave traders a fantastic opportunity for first bounce. Again, fractal, another ascending triangle into the setup. No explosive blow off on the news. So traders coming back to who were shorting that market, there was 10 full minutes before the first bounce trade was triggered. And that comes back to understanding the bigger picture. And I love this. The trader said, I don't gamble on 1 minute charts. And neither do we. Well, this is a 3-day, 3-session parabolic setup with a full 10 minutes. So if you think that's a 1-minute gamble, stare at a wall for 10 minutes and realize how long that really is. This is a 3-day, 3-session parabolic reversal short squeeze opportunity on a Friday after major red news. Day 3, parabolic short squeeze for Free Cash Friday. So coming back to Monday, opening range sets the initial high-low for the week. You want to try and identify the best instrument for a best trade setup. Not trying to just trade movement. We're looking for scalable, parabolic, rinse and repeat opportunities. If you are patient and allow that template to unfold, you can see the larger 3-day setups. You can see whether or not you're in breakout. You can see if you have a parabolic 3-session setup, 3-day setup. You want to identify the best instrument for a parabolic opportunity in the session that you are trading. Have the patience and the discipline and confidence to know when to put a trade on, not just guessing a direction, not just selling the high or buying the low or trading something because you think it's going to the high or going to the low. Understand the power of the opening range and understand the power of a parabolic trade setup. Keep it simple, traders. Next week, we will be getting the same opportunities. Free Cash Wednesdays, Free Cash Fridays. Keep it simple. Focused on the highest probability opportunities. Stay out of the quagmire and the junk. Don't do stupid things that sabotage your good results. Don't overtrade. Don't over-leverage. Don't go in and out, in and out, in and out. Identify a best opportunity. Know when you have a scalable opportunity. Know when it's a session scalp. Lock in the money, get off the screen, and get on with your day. Have a great weekend, traders. Enjoy yourselves. Again, a very lucrative week for several traders. Congratulations. Keep it going. Keep it growing 1% better every single day. And may the markets go with you.